this segment is going to be mostly Elise talking about capital gains, some tax update stuff. Some of these, Obama has come out and talked about increasing capital gains taxes, right?
Yep, for the 2016 fiscal year.
And some other things in the budget for 2016, some of the proposals and how that will impact your pocketbook. So you're going to want to stick around for that. Also, we have our Ask the Expert segment regarding free credit reports. Can you really get one? So Elise, what is going on? Again, this is Elise, our regular partner here. She's a certified financial planner, also CEO and founder of Azure Wealth Management. You can reach out to her at azurewealthmanagement.com. Elise, what is happening? I mean, I've heard Obama talk, right? I mean, more taxes and redistribution of wealth.
Yep.
What's happening?
It's interesting because when I chose the topic for today, it was as a direct reaction of several clients and friends who have made comments or reached out just in the last few weeks. And what some of our listeners may not realize is I'm heavily involved in an organization called NAIFA, the National Association of Insurance and Financial Advisors. And I do a lot for them when it comes to just political involvement and advocacy. So that's where I'm always up to date on this stuff. You're welcome to visit my website if you'd like to see some links to content on what's going on. But Obama we just got the first review of the 2016 budget that he proposed to Congress, and it's important to know. First of all, I should say these are just proposals, but this is what is going to be decided upon this year in Congress. So these are important issues that we need to understand, we need to be aware of, that we need to be planning around, and a couple of them specifically pertain to real estate. So I have a client that has a home up on the Canadian border in Minnesota. They've owned it for 25 years. They built it for about $60,000, and it'd probably be worth about $400,000 today.
Nice.
They have not lived in this home now for 4 years. So the first thing that I discussed with them was, what do you want to do with this house once you sell it? They had originally kept it thinking they might move back, they might retire eventually. But in our most recent review, I just brought it to their attention again that they're now outside that window where you can live in your home for 2 out of the 5 last years, or 2 out of the last 5 years, and claim it as your primary residence and get the tax deduction of $500,000 of your capital gains if you're a married couple. They're outside that window now, so they're going to have to pay real estate capital gains taxes on the gains that are on this house. At this point, it's about $340,000 of gains. They're going to have to pay 25% of that when they sell the house.
Now, one question, Elise, you and I talked about this a couple of weeks ago. Can they move back into the house for 2 years and start that all over again?
No, and I'm glad you asked that. That is a very, very common mistake that we still see today that changed in 2009, and it's called Section 121. I'm not going to get into all the details here, but basically you don't get to move back in for 2 years and reclaim that whole tax deduction. So you just want to make sure that you're paying attention to that. You can reclaim some of it, but it's a very small portion, and it's based on the total amount of days you've had it as your second property versus primary. So, but
Yeah.
Section 121, can't do that anymore. So they can't move back for 2 years and then sell it eventually. And so another question that I just had recently was, a 90-year-old client owns a huge property out on the East Coast. Wants to get rid of it, huge hassle. Again, they said somewhere around like $150,000 to $200,000 is what it was purchased for decades ago. So they asked, should we sell this property, Elise, because Grandpa's tired of managing it and tired of all the stresses related to it. Well, again, most people don't realize that if you pass away with real estate, whatever the cost basis or the money that you bought it for will adjust to the value that it's at the time of death. So this particular client, if the home is worth about $1.5 million, and this is obviously a very unique situation, the home's worth $1.5 million, and if there's only $200,000 that they bought it for, think about the difference.
So just to be clear, the cost basis is what you paid for it, including repairs and such, and the difference between your cost basis, let's say it's $200,000, and the sale price, let's say it's $500. So you profited. Or the difference is $300. So that's what's subject to tax.
Yes, absolutely.
Okay, not sure everybody quite caught that, but
absolutely.
So in this case, if someone passes, you're saying that the cost basis becomes the market value.
Yes, it absolutely does.
Death.
Yep.
Okay, so instead of the cost basis being $200,000 and $1 million being subject to tax, none is subject to tax.
Absolutely. it is a good thing to pass away with real estate in your estate. Pass away with it, because again, the tax will go down because you're not
Right.
having to pay the capital gains on it. And again, most people also don't realize that capital gains taxes for real estate are higher than just for your normal investments, they're 25%. So a lot of little things happening like that, it's just stuff that you need to be aware of, because otherwise, you know, you might erroneously sell this property when you're 90 years old and your estate
Right.
loses all that money in taxes, so.
Right,
So because we talk about selling, you know.
right.
with
And
How to
I've
list it, and
exactly, and with selling, I've had both scenarios. I remember one time I was at a closing with a woman. I had the buyer, so it wasn't my seller. And here she's signing all the papers, and the closer says, okay, have you lived in the property 2 out of the last 5 years? And she said, well, just about. Next week, it'll be my 2-year anniversary. And I'm going, what? And her agent sold her that property. And so here she had to pay capital gains on that because she missed it by a week.
Yep.
So that was horrible. And then I had another situation where a couple got divorced and their property, they thought it was worth $1 million, and they thought they were gonna have this $500 exemption for a couple. Well, then it didn't sell.
500,000.
Right,
Yeah.
500,000,
Yeah.
sorry.
Yeah.
It didn't sell for a couple of years, so they lost his $250,000. So now the capital gains went way up, you know. And then the other one I was talking about too earlier, where my client moved here from California, her husband died, and they had a property over in Italy, and now they've got to pay capital gains to Minnesota on that property, so.
For selling the property in Italy.
Exactly, but if they would have stayed in California, they wouldn't have had to.
Because the state laws are different there.
Correct.
So the point, or a point in all of this is that if you're thinking about selling, you know, Cheryl can help you out with the pricing of it, but you're gonna wanna talk to Elise regarding strategy
Yep.
and timing and how it impacts you, because some of these things could make a huge difference, right? I mean,
That's a lot.
And there's a-
thousands, if not tens of
Oh,
thousands in some,
absolutely.
is that right?
Absolutely. I mean, and there's a huge difference between working with professionals that are up to date on what's going on versus who are ahead of the curve because they're paying attention to what's coming down the pipeline versus somebody that hasn't updated their information in 4 years outside of the CE, you know, continuing education
Sure.
credits that they have to do.
Gotcha.
Well, and this is again where we talked about the emotional traps earlier, where that comes in. Emotionally, you're thinking, I need to move closer to family, and then, you know, somebody dies and you didn't think about how the capital gains changes from California to Minnesota.
Yep.
So you have to have your professionals looking at the whole picture, and not just move based on the emotion of what's going on in the situation. You have to be smart about it.
You know,
That's right.
another situation was that another particular client I have was getting close to retirement, but maybe sees a couple more job changes coming up, and doesn't want to commit to purchasing in their local market because the company that they're working for is actually in the process of being sold to a hedge fund at the moment. So it's high up in the business. Had no idea. He thought, you know, why don't I just go and buy a lake, like a vacation property or our warm weather property? I brought that up, and it was like the light bulb turned on. They had been so focused on their primary residence in that city where they're working, and I recommended them buy their forever property, low interest rate environment. They don't own a home right now, so why not do it? But
Good
you know,
advice.
until you have those conversations, people sometimes just don't even think about it.
And folks can get a hold of you at azurwealthmanagement.com.
Yep, absolutely. Or 651-300-2456.
What was that again?
651-300-2456.
And what else has been going on that's caught your eye and coming up in the 2016 budget proposals?
Oh, there's a lot of stuff. Yeah, one of the biggest ones I was just telling you guys is that they proposed a limit even on how much money that you can have in qualified retirement accounts. So 401ks, IRAs. That limit was proposed at $3.4 million as of right now. You know, and there are a lot of positives. You know, more access to retirement accounts for smaller employees. But the thing that I always think about is it costs money somewhere. It costs money for these employees to administer plans, even if there are tax credits coming down the pipes. There are a lot of other inheritance tax issues. They're proposing that they drop those inheritance tax limits, or estate taxes, death taxes. Again, right now they're up above 10 million, and they're proposing that they drop them back down to about $3 million. And then also there have been a lot of proposals that that inheritances should be also taxed to the recipients. So think about that. You're paying taxes your whole life on your savings and your assets. If you have enough, you're also paying inheritance taxes, and then your beneficiaries would be taxed on it again.
Wow. Why
That's
don't
a
we
lot of
just-
tax.
A lot going on. You know, and at any level, any level, nobody likes taxes.
That's right.
It's
We're
true.
with you there.
Maybe we should just move to Winnipeg and live in a teepee and,
I grew up pretty
It's too
close to
cold
there.
up there.
yeah. Well,
Yeah, warm, please. I want warm
Yeah.
and a beach.
All right, we'll be right back with a mortgage checkup for you. Some featured listings. Also, ask the expert regarding, can you really get a free credit score report? I don't know.
Good
We'll be right
question.
back on AM 1280 The Patriot.